Hi, this is Jim Pearce, Chief Investment Strategist for Personal Finance, with a weekly update on Friday, January 24th, 2025. President Trump laid out his political agenda yesterday at the World Economic Forum in Davos, Switzerland. Now here I have a link to the speech, and if you didn't see it, I suggest you read it. He pretty much repeated a lot of his usual comments regarding immigration, taxation, and trade tariffs. When he said, "With oil prices going down, I'll demand that interest rates drop immediately." And by the way, here's a chart of oil prices over the past 6 months, and you can see that what day is this? January 15th, price of at least crude oil peaked around $80 a barrel, and since then it's dropped back down to 75. So it's true that they've been coming down recently. If we look at the past year, let's go back 1 year, say, it's about the same. I mean, look at where it was a year ago. It's been above it, it's been below it, but I think it's too soon to say that this is a trend, although it may be. But nevertheless, that's his rationale for wanting or thinking that interest rates should and could go lower. But regardless of what he or anyone else wants interest rates to do, they have a mind of their own. And that's due to the global nature of the economy, which is beyond the control of any one person or country for that matter. Presumably, Trump is attempting to influence central bankers from other industrial nations who were at the forum to agree to drive down interest rates at the same time, regardless of the economic circumstances specific to those regions. So, for example, in this country, we have unemployment at roughly 4%, inflation at roughly 3%, GDP growth at roughly 3%. Well, those are our conditions, but you go to Europe and Asia and South America, I mean, they're dealing with different sets of conditions. So for one person to come in there and say, hey, everybody, we're all going to drive down interest rates at the same time because that's what I want, not going to happen. That won't work. The bond market has the final say on interest rates, and right now it doesn't seem to think that lower rates are on the way. And let me get that chart up for you, and I'll show you. In fact, the yield on the 10-year Treasury note ticked up yesterday after Trump's speech. And here's a 6-month chart. I'll zoom it into like the past month. But you can see here, 21st, 3 days ago, and since then they've come back a little bit. But again, if we look at the past year, just like we did with crude oil, we can see that interest rates are really still at the high end of where they've been during the past year. Now, the price of gold also ticked up and in fact reached an all-time high this morning above 27.92. You can see here it's dropped down a bit, but if we again look at the past, say, 5 years especially, you can just see gold was trundling along, and then after the Fed started raising interest rates, it fell a bit, but once it became apparent that the economy was growing again, bam, and off it goes. Really, for the past year, price of gold is up about 50% during the past year. Now, my suggestion to President Trump would be to forget about trying to jawbone interest rates lower and focus instead on fiscal policies that will have that effect. Although oil is a major component of inflationary pressures, so are a lot of other things, including food, housing, and transportation. And we'll have a better idea of how those items are faring when the Personal Consumption Expenditures Price Index for December is released at the end of next week. So I'll be talking to you a lot about that next Friday. Until then, all the talk you hear about interest rates is meaningless or conjecture. If the PCE numbers support another reduction in the Fed's policy rate when it meets again in 5 days, then that's what will happen. But if they don't, the stage will be set for a showdown between President Trump and Fed Chair Jerome Powell. Powell has already stated that he has no intention to retire before his term expires next year, and that the Federal Open Market Committee, which he chairs, operates independently of the White House. If he feels that lowering interest rates might trigger another surge in inflation, then he's not going to want to do it. Now, these are two men with strong convictions that don't like to be told what to do. My guess is there will be strong words exchanged between them next week that will send the financial markets into a tizzy. Do not allow yourself to get caught in that trap. The next couple of months could be acrimonious between the president and the Fed. Trump's economic agenda relies heavily on lower interest rates and lower taxes to spur growth, but at the same time, his party has also identified reducing the federal deficit as a top priority. What this really boils down to is simple math. And right now, the math suggests that if Trump really does do all the things he said he will do during yesterday's speech, then the financial markets will determine the appropriate level of interest rates. That's this week's PF Update. I look forward to talking to you in another week. Thank you.